over the past 2 weeks, I've been looking at the Liberty empire of John C. Malone. If you don't know him, he's one of the richest men in America, the second largest landowner in America. But what's more interesting for us as investors looking to invest in equity is his portfolio. And unlike Warren Buffett, who has one holding company, Berkshire Hathaway, buying other companies, other stocks, John C. Malone has a different approach to investing. He has several holding companies. And out of these holding companies, he tries to maximize the value. So he's not just someone who's going to buy stocks and hold them. He tries to maximize value to shareholders. So in a way, he's an activist investor. So he invests in these companies, get on the board, make basic investments, and then try to reward shareholders by maximizing the value in these investments. I have looked at several of his investments. For example, Curate Retail, which is not doing so well. I have also Warner Bros. Discovery in my portfolio, which is a stock in which John C. Malone has a big ownership, and he was also a director of the company. But today we are going to talk about two companies that I like when looking at the whole Liberty portfolio, the whole Liberty empire. Two companies I invested in. The first one, and this is the first stock I'm buying in November of 2023, it is Sirius XM. This is a company you will see on the portfolio of Berkshire Hathaway too, and it is the largest holding of Seth Klarman. So there are many value investors who like this stock. So we need to understand what is so interesting about this company. First of all, it has a moat. Before we talk about Sirius XM, there is something very important to understand. There are two ways, or rather 4 ways to buy Sirius XM. There is something called a tracking stock. So unlike Berkshire Hathaway, where you buy the whole holding company, here you can buy part of the company. So you will see that there is a company called Liberty Media, and this company has several stocks. For example, they own also Formula One. For Formula One, you have 3 different stocks, and even for Liberty Media Sirius XM, you have 3 different stocks. So you can choose which part of the company you want to own. And why did I say 4 stocks? Because the company is also separately traded as a public company, as SIRI, which we'll talk about in a few minutes. But the 3 stocks on the Liberty portfolio, you will see there is Class C, Class A, and Class B. So it all depends on how many votes you want. But all of these 3 stocks have the same economic values. Let's talk about Sirius XM. What is this business, and why do I say it has a moat? Let's say today, the CEO of General Motors, the CEO of Ford, they wake up and they're worried about a few things as CEO of a big company. They're worried about the unions. They're worried about competition. They're worried about making the best electric vehicles to compete with Tesla. But there is one thing they are not worried about. What is going to be the default radio station on their new cars that they're going to sell in North America? Because this is a very small thing that nobody should really think about. And the default, most of the time, is Sirius XM. Sirius XM is a satellite radio provider, and it is the default on most American sold cars. So if you go to America, you buy a new car, by default, you have Sirius XM. So you have a free trial, and then you can renew your subscription. And there are many people who are going to renew their subscription. So this is the business of Sirius XM, satellite radio. And now they have expanded into podcasts for Pandora, an acquisition they made, which is interesting. So the business is very sustainable. They have good margins. They are able to generate cash flow, and they have quite a good balance sheet, I will say. But is the stock undervalued? So if you're going to buy the public company SIRI, it is not undervalued. It is overpriced. But now if you look at the portfolio of Liberty Sirius XM, which owns 82% of SIRI, 82% of Sirius XM, then it is undervalued. So why this is the case? Is there a possibility of arbitrage? Not really, because there are some of the debt of the company of Sirius XM which are on the balance sheet of Liberty Sirius XM. I know it is complicated. It is always going to be complicated the way these companies are structured. I have made mistakes. This company also had an ownership in Live Nation, which is the owner of Ticketmaster, and they already had a spin-off. I made a mistake. Initially, I thought the spin-off was coming in a few months, but it already happened. So you're going to be confused with this company. That's why you have to do your research well. Nevertheless, if you want exposure to Sirius XM at a good price, of course, you take extra debt. it is better to do it through Liberty Sirius XM. And this is why I'm investing in this company. The second stock I'm buying in November 2023 is a little different from what I'm doing. Here, I'm not choosing the parent Liberty company. I'm going directly with the main company itself. And that is TripAdvisor. It is a company I've been using for years, the products. Whenever I'm going somewhere, I have to book a tour somewhere. I do it through eToro, which is owned by TripAdvisor. I go to look for places on TripAdvisor, so it is something that I use. And I know that I use it. There are many other people who use it. The stock has not been doing so well. It is mainly because of competition. Airbnb, Booking.com, even though they are more geared towards accommodation, for example, Booking.com is for booking hotels, you can also have a look at activities that are suggested to you. And I have never used Booking.com for activities. I have never used TripAdvisor for hotels. I have to tell you what I actually use them for. For Booking.com, it's only for hotels. For TripAdvisor, it's for activities. Even though most of the revenues of TripAdvisor comes from booking hotels. There is competition, it is true, but the revenues are still increasing at a slower rate, but still increasing. The company has a good cash flow generation. You have to look at 2020, 2021. These were exceptional years. People were not traveling. But before that and after that, things are getting better for the company. And they have a very good balance sheet. They have more cash than debt. But here, once again, some of the debt are on the balance sheet of the parent company, which is called Liberty TripAdvisor. But unlike with Sirius XM, with TripAdvisor, it is better to own the subsidiary rather than the Liberty parent company. Why? Because some of these debt are debentures, and they are going to lead to share dilution in the future. If you look at the stock today, it is undervalued, even the Liberty stock. This is what I'm talking about. It is undervalued. I have calculated the intrinsic value. It is undervalued according to me. But it is risky because if, let's say, they are unable to repay this, they have to dilute shares in order for them not to go bankrupt. The parent company can go bankrupt. But TripAdvisor, they have such a good balance sheet that they cannot go bankrupt. And you look at TripAdvisor stock also, they had a notice from Nasdaq that they're trading below the $1 a share for a long time, and they have to do something about it, or else they will be delisted. So there are 3 shares once again, and 2 are publicly traded, the Class C and the Class A. You will see that the Class C seems to be much higher than the Class A. It's because the Class C has such a low volume being traded. It is mostly owned by insiders, so that's why it seems that it is so high. Now, if you're interested in arbitrage, you want to buy the Class A and throw the Class C or whatever, you can do that. But I want exposure to TripAdvisor business. And the best way at the best price to get it is through the Trip stock itself, not Liberty. And the third stock I'm buying in November 2023, this one is simpler. It is CF Industries. It is one of the largest fertilizer companies in the world. So they produce fertilizers, mostly nitrogen-based fertilizers, urea and other things. So this is a cyclical stock, a cyclical industry. At some point, prices of fertilizers go up, these companies make a lot of money and prices then drop, and then their profits go down. They don't lose money, their profits go down because CF Industries is still profitable. So there are 3 main fertilizer products. There is potassium, there are phosphate, phosphorus, and nitrogen. For the nitrogen one, it is mostly ammonia and urea. If you want to look at the price, the one that is the most quoted is urea. CF Industries focus on nitrogen, urea, and ammonia. They are one of the largest players in the world, with most of their sales in the United States. There's a war in Ukraine, and Russia and Ukraine are some of the largest producers of fertilizers. We may have higher prices in the future, but I'm not betting on this because this is macroeconomics. I'm betting on the price at which the stock is being traded today, CF Industries. They have a very good balance sheet. The cash and debt is about the same. So net cash, net debt of 0, which is not really what you will see with the competitors. So even though prices went up, they did not take so much debt to expand into other things. And they are trading at a good price. But if you have to compare with potash, phosphate, and urea, phosphate and potash, because these things have to be mined, these fertilizers, these products have to be mined, the business is more capital intensive. You need more money to mine. But you can also make more money if fertilizer prices go up. but you can also lose more money if prices go down. While in the case with urea and nitrogen products, the amount of money you make is limited, but you have very good margins because it is not capital intensive. You don't really need to go and mine nitrogen. You produce nitrogen. The main raw material to produce nitrogen is natural gas. So if prices of natural gas goes up, the company is going to be making less money. This is the main risk, natural gas. But over the long term, we'll still need fertilizers, we'll still need urea, we'll still need ammonia and other nitrogen products. That's why I'm investing in this company. I'm betting over the long term. Of course, I understand it is cyclical. And if you're investing in a cyclical stock, at some point, maybe it is going to be overvalued. You take your profits. But for the time being, it is undervalued. And that's why I'm investing in this company. So these are the three stocks I'm buying in November 2023. CF Industries, Liberty Sirius XM, and TripAdvisor. I would recommend you watch this video about Spectrum Brands, another company I have been investing in recently. Have a nice day and goodbye.